Hello and welcome to another episode of Coffee Colombiana's podcast. Today, we are going to talk with Andrés Duarte, our Equity Research Head, about Canacol. Canacol is a leading natural gas producer player in Colombia that is engaged in the production and exploration activities in the Middle and Lower Magdalena Basin in Colombia. This corporation is listed in the Colombia Stock Exchange, the Toronto Stock Exchange, and in the over-the-counter QX exchange in the United States. Hello Andres and welcome. Please tell us, what is the importance of Canacol in Colombia?
Thank you, Maria Victoria. Canacol has contributed to the development of the gas sector in Colombia, and this sector will be key during the current energy transition taking place in the country. This company has an outstanding exploration track record, and this success has to be recognized as well, given the relatively low gas reserves that we have at the country level. Nowadays, Canacol holds around 20% of Colombia's gas market behind major oil and gas companies such as Ecopetrol and Chevron. And this relevance has been obtained despite being a junior company, a pretty small oil and gas exploration and production company with very little representation in Colombia's capitalization index, the Colcap.
Andres, let's talk about our price target for the company and tell the audience what explains this figure.
Okay, the 12-month price target is 15,219 pesos. That's around 4.1 US dollars, and that implies a 46% return potential with respect to April's closing price. This upside is explained in part by the stable cash flow generation, given around 4/5 of their revenues are pretty stable. They come from long-term contracts, and this has enabled the company to engage in several projects that we find feasible and explain the constructive view we have on the future of this company. These projects include first the 300-kilometer Jobo-Medellin pipeline that should add 100 million cubic feet per day of additional contracted gas sales. Second, the construction of Tesorito thermoelectric plant that should add 30 to 40 million cubic feet per day to gas sales. And this is assuming the thermal power plant operates at a 75% capacity. And third, the development of high return assets located in the BIM-5 reservoir should ramp up production from 200 million cubic feet per day in 2021 to 300 million cubic feet per day in 2025.
Are there any risks to be considered with respect to your valuation?
Yes, we find the outlook implied in our valuation models pretty feasible, but of course, several risk factors are implied in this outlook. First, the possible halt to drilling and delay on the Jobo-Medellin pipeline project. Second, longer than expected quarantine measures related to COVID-19, a situation that had a toll on 2020's results. Third, an adverse effect of the Colombian depreciation on the competitiveness of natural gas with respect to liquefied petroleum gas. And finally, lower production and reserve buildup because of exploration failure or delay in CapEx.
Why did you use a net asset valuation approach instead of the usual discounted free cash flow?
Well, actually, we did both a net asset valuation model or NAV model, as well as a discounted free cash flow model or DCF. But our price target was obtained using the NAV one. The explanation has to do with the fact that hydrocarbons such as oil and gas are finite, non-renewable, so it makes no sense to assume a perpetual cash flow after an explicit projection period. What we did on the NAV model was basically depleting all of the company's gas reserves, both developed and undeveloped reserves. And in the case of the DCF, we sold the remaining reserves after the explicit projected period. So under no circumstance we assume gas reserves last forever.
And to conclude, is there any specific content you would like to highlight to encourage our followers to read the report?
Yes, there are several topics I would like to highlight, including the price concern that arises whenever international reference prices vary broadly. This concern, of course, depends on whether you're analyzing from the side of the producer or the consumer. For our analysis, we took Canacol's side. We analyzed the trajectory and structure of the spread between the Henry Hub reference price and the Colombian importing price. And as you will notice, this analysis dismisses the concern for the case of Canacol. Thank you, Vicky. I would like to end this conversation by encouraging our listeners to visit our research website. That's investigaciones.corficolombiana.com. This website has several subsites, including, of course, equities, where you will find this report, as well as several others. And I would also like to encourage our listeners to visit our strategy website from our stock brokerage company, which is Casa de Bolsa. The website is casadebolsa.com.co. Thank you. Bye-bye.
Thanks, Andres, for sharing with us this analysis, and thank to all our audience for being with us in this opportunity. Remember to join us on Spotify, download this episode, and leave a rating. You can follow us on Twitter, Facebook, and LinkedIn as @CorfiColombiana. I'm Victoria, your host, and you can join us in our next episode.